welcome. We just start recording too. It's a really pleasure having you all in here. I hope you all grasp whatever I'm gonna give you and really put in the work, because no matter what I give you, without you putting in the work, it's not gonna work. It's just an equation or a formula with one constant. Good. So let's start cracking the boot camp. So what we're gonna do during those 2 days, basically, I'm going to be passing my knowledge, starting from the foundation of whatever I do in trading, all the way up to psychology and creating the system and building the system you want to trade, basically, whether you want to scalp or have big or risk to reward trades, etc. You're going to be taught how to do all of this step by step. Good. However, my own experience, it's an advanced experience. It's not a beginner or something, because if you're looking for something that's for beginners, that's you're gonna find for free on my website, or my own ebook, and it's on the internet. But the holy grail, there is no holy grail about nothing in life, but it's all about how to do things in the right context, in the right time. So therefore, we gotta build a foundation, a proper understanding of what we're doing, why we're doing it, and how we do it. And therefore, we gotta start with the smallest step in the foundation. So therefore, we're gonna start first with the learning curve. Good. It's a simple learning curve, and mostly everyone goes through it. Everyone, basically, being a student, practitioner to a master. Good. So if you're looking at the curve, which is, we got the x-axis experience, y the time. Good. So you got experience over time, right? So as you be progressing in your life in trading or in trading career, good. So you're going to be moving forward. You're going to be getting a couple of lucky shots, a couple of lucky trades, etc. You're going to be making some money. I've met a couple of cases in my life, some people who really made a couple hundred G's in their first couple weeks of trading. And they've been struggling since then to make $2 a month consistently. So as first, you're going to be starting, okay, seems fun. You're going to be, okay, working out. Seems good, because sometimes ignorance is such a gift. Let's face it, sometimes ignorance is really such a gift. Good. So you're going to be moving forward, and then you're going to be start to decline with your journey. And that's when you're going to understand, like, okay, I gotta be a student first. I gotta be learning first. So you're going to be learning in your learning curve. You're going to be a student. While you're being a student, you're going to be going up, going down. You're not essentially the way that this chart is drawn, but you're going to be moving up, moving down with your experience, because you're a student. You're learning from your experience, and mainly in trading, your experience is about data, about trades, about orders you executed in the market, from stop loss to entry to TP. So the more data you have, the more accurate decisions you can be taking further in the future. Good. So then, as you're progressing in your in your life as a trader, you said you're starting as a student, continue being a student, and then you realize that, okay, I'm learning. Your learning curve is increasing. You're having more data, you're accumulating more data in your favor. Good. And that's when you become a practitioner. Good. So let me put this in a simpler context. You're making money for a year in trading. That doesn't mean you're a master trader. Good. For you to be a master trader, you gotta be mainly living out of trading for a minimum of 2 to 3 years. Good. So other than that, you're either a student or a practitioner. Good. And there is no ego in this. There is nothing wrong in being a practitioner. Like practitioner is the funniest period of your learning curve, because you're done being a student. You learned everything that you had to learn. And practitioner is the phase where you're constantly executing and studying the events that you executed. Basically talking statistics. Makes sense? Please keep it active. Yes, no, yes, no. So if there is nothing doesn't make sense, we'll repeat it. Good. So that's the practicing, like the practicing phase. When you're being a practitioner, that's when you really consolidating this block of knowledge in your head and just being creative with it. Good. Then over the time, you're going to become a master. Okay, does you becoming a master mean that you ain't learning nothing in you? No, you're constantly learning. Doesn't mean that you ain't practicing no more. No, you're constantly practicing. But what's the difference between those three phases as we discussed? So the student phase, you don't have nothing in your head. You have zero knowledge, you have zero data. You start learning, you're progressing, you're saving those data in your head. You're learning, you de-learning, etc. And then you're being a practitioner then. What means is you have the knowledge and you're practicing, you're applying this knowledge. You're gathering data out of this knowledge. You're gathering winning trades, losing trades, etc. You're having what? You're having a set of events later on. Then the mastery phase is all based on what? On that chunk of data that you gathered during your practicing or your practicing period. You see, the whole mastery period is based on this period, is based on the practicing period, is based on the statistics that you gathered from your being a practitioner. Why? Because while you being a practitioner, you gather data, right? You gather a set of data for a set of events. And then the road to your mastery is analyzing, statistically knowing what works and what doesn't work. And how can you decide on that? Is mainly through practicing, right? So if we want to include some psychology in this, as you're starting as a student, some will be humble, right? Some will be egoistical, as I've seen in my life. Some people they studied medicine, they are really successful doctors in their lives, successful attorneys, etc. So they think that, okay, they know the holy grail about life and trading is the same. No, let me bust your bubble, because trading is the toughest field or career on this planet. You can be a scientist easy. You can learn how to be a scientist. You can do it. You can learn how to be a surgeon. You can do it. You can learn how to be a successful attorney. You can do it. Why? Because none of this involves that much of mental awareness and psychology as trading. Good. So you're talking about any significant imbalance in your awareness that's going to affect your decisions, right? Okay, how do you understand that? That's the thing. How do you understand that? That's the job of you being a student. Sorry for that, but you go to, I don't know, you go to uni for 3 to 4 years, you study marketing or whatever the career path you chose, you study marketing for 3 years, as we discussed here, and then you gotta get practicum, you gotta practice basically for a couple of months, 6, 5. Some universities, they ask you for 3, some these for 6, some for 12 months. And most probably this is not paid, it's for free. And if they pay you, it's just like pocket money for transportation or something to eat, etc. It's not even up to pay a freaking rent. right? So that's in total of, we're talking about 5 years, right? We're talking in total of 5 years of learning curve for you to start earning a standard wage, the minimum wage. Talking about the West, I don't know, the US, Northern America, or Europe, we're talking about, or Western Europe, sorry, we're talking about 20K a year. That's your minimum wage. And then as you start progressing in your life, and as you becoming more smarter and aware of your career path and your decisions, your wage is going to be increasing or stabilizing, right? If you want to think about it, think about how many people you know in your life earning minimum wage. By minimum wage, I'm talking about 25 to 35,000 euros or dollars. Yeah, that's why I mentioned basically the US and the Western Europe, because it's where I live. Good. I didn't even mention Jordan because, okay, if you want to talk about Jordan, for instance, you know, what I earn actually in a day, it's equal to what a minister in Jordan earns in a freaking year without stealing money, definitely. Good. Or what a freaking manager of a bank or CEO of a bank earns in a year. Good. In a month, sorry. Good. So just give an example of the Western culture, for instance. Then let's get back to it. Then how come you're basically expecting yourself to come to trading and within a couple of months start making this minimum wage, which we're talking about 2Gs a month? Yeah, I'm not saying it's tough. Wait, I'm not saying it's tough. I'm not basically saying it's tough. At some point of your career, those 2Gs you can be earning in a couple of minutes. Good. I'm talking about this, not just Jordan. Even if you look at Dubai, do you think most people earn there? Unless you're like a senior in a senior position or in a board position, etc. However, if you're a successful trader and you're not just trading for yourself, you're trading for a bank or something, your salary can be a minimum of 400K a year. That's your minimum wage as a successful trader. Yeah, exactly. That's a conversation I keep on having with different people wherever I travel, with like middle class people, you know, with middle class thinking too, or mentality, which is, it's basically, it's not about money because, okay, you're thinking people in Jordan, they think people in Germany, they are like so happy. No, or in Ireland or in the UK. No, that's not the case. Because the minimum wage there, okay, is way higher than the minimum wage in Jordan. But if you want to compare the cost of living, etc., is the same at the end of the day. If you look at these people at the end of the year, they both don't have 2 grand extra in their bank account. They both have debts. They both buy their furniture on credit. They buy their TV. They go travel on a vacation using a credit card, etc. So why am I mentioning all of that? Why am I mentioning all of that? Basically, because you can't just be expecting yourself to be sitting in your house, in your boxers, or wherever the heck you like to sit in your house in, and start earning money straight away. This doesn't work. This basically doesn't work. because you're basically coming to the freaking toughest market or industry or career path on this planet. Right? If you're talking about people, you know how many times my bank account gets blocked or halted a month? Talking about twice or 3 times. Every single time I get more than 5 grand hitting my bank account, which is something normal, they halt my bank account. They want my statement. Where this money came from, bro? Be fucking like, use your brain a little bit. Who sent me the money? You can Google the name. It's a broker, you know. So it's, yeah, we all want to live a good life, but there is a cost for a good life. Good. There is a cost for a good life. So the other day I was posting about learning curve, which were like 3 bowls. One was just going straight. The one just had a little downfall, and the other one had a tougher downfall, like a deeper one. Sacrifice. Good. So the one that was straight, going straight without no downfall, it actually was the slowest. This one was a bit faster. This one was the fastest. Good. This one was actually the fastest. The one with a deeper downfall. Good. So there's always a cost. You gotta sacrifice to be able to be where you want to be to, and really put in the work. You gotta have such a really solid work ethics. You're gonna really put in the work, because I promise you, within 3 months, if you really put in the work, you can basically flip your life 10 years ahead. Good. Okay, perfect. So far we're done with basically the learning curve. Good. And for most, this is basically the burning section. Somehow you'll just enjoy watching charts, learning on charts and seeing charts, right? That's something I've noticed during me coaching people over the past 1.5 and 2 years. Good. So now let's talk about trading in general. Good. So as you all know, there is a value investing, which is if you buy Bitcoin at, I don't know, 20 grand and you keep it running, etc. This is mainly fundamentally driven. This is mainly you're looking for the future of something. Good. And you can't be using leverage for this unless you have tons of money to back that margin. Good. So that's when you're talking about spot, basically. You're buying gold in spot, etc. You're buying Bitcoin, cryptocurrencies, whatever kind of asset, class of asset you buy, but it gotta be in spot, you're not using margin on it. So I own Fiscal gold and I'm holding for the future, but it's Fiscal because it doesn't make sense me borrowing money and buying something and just keeping it. What about the fees, the interest, etc., etc., etc.? So that's for value investing. Value investing, you gotta have money to do value investing too, right? So the goal is to build wealth, not to get rich by accident, right? And that's the problem. That's a major problem I've seen with lots of my friends in the crypto industry too. They got, over the past bullish bull run, tons of my friends, they got like rich and now they broke because they got rich by accident. They got basically rich by accident. The last bull run was like so dumb that my daughter, she's 6 months old, would have executed a profitable trade. Right? So that's for value investing. We're talking about value investing. Good. Then if we're talking basically about we're basically talking about swing trading, which is something I hate to do. And if I have students in here who already studied and been coached by me, they already hate it too, because it's speculation. It's basically speculation. It's 100% speculation. There is no facts in there. The only fact in there is supply and demand. And later on, once we talk about the Newton third law, we're gonna understand why this is the only the only fact in that part of trading. Because you're basically executing a trade based on a price, good, and you're expecting this price to take it up. Technically, like just using technical analysis. And this doesn't make sense. This is so dumb. This is so inaccurate. Doesn't make sense at all. Because you're talking about 1 weekly candle is 5 daily candles. You're talking about 5 days a week and 2 days off. You know how many things can occur in such an environment that can flip the technical view and be fundamentally mainly driven? If you want a case study for this, if you basically want a case study, the most recent case study was the war, right? Was the war. And then gold started dumping because basically it didn't go well with the Western agenda, because the Russia picked the ruble to gold, etc. And having an expensive gold, that means stronger ruble, which is against their agenda. So that's let's say that's a controversy for fundamental, that's mainly fundamentally driven. Good. We're talking about most of this momentum that happened there. All of this momentum was just happening during the Asian session and the London session, early London session, and then the dump. All of this was dumped in New York. So you're talking about 1 weekly candle with all its volume that was moved in 1 day, right? If you want to look at more case studies, so you can go to the last, to 2020, basically, during the COVID, when gold basically shrunk to the downside, especially that this here was like a major liquidation for tons of people out there, not just retail people. No, we're talking about investors, VCs, etc., institutions. Why? Because fundamentally gold was bullish as fuck. Fundamentally gold was bullish as fuck. But however, what was happening to, you had a lockdown, nobody's in the office. You had a commission closing to. Spreads were mad. Spreads were super mad. I remember during that month, I was executing 0.1 because spreads were like 25, 50 pips, you know. There is nothing I can execute. If I want to execute a lot, that's like, wow, minus 50 pips for me without even me moving one pip ahead, right? That's why at first I was saying education is important, and your job as a trader is to educate yourself constantly. You gotta understand finance, economics, behavioral finance. Since traditional economics was trashed by behavioral finance too. So let's keep moving. Then if we're talking about day trading or scalping, you know, for me, both are under one category because they just move during the day. It's an intraday trade, they say, or an intraday movement, which is mainly driven by what? Mainly driven by three forces. Now, if we want to keep on talking about this, it's mainly driven by three forces. And those three forces we're talking about: time, right? X-axis, the time, the Y-axis, we're talking about the price, right? And the third force, which is speed, which is momentum. So you have a formula in here. So when we're talking about time, we're talking about sessions, the open and the close of the sessions, right? We're talking about price. We're talking about psychology, talking about supply and demand, or whatever you want to call it, order blocks, whatever you want to call it, is the same shape, but different fancy names, you know. So, but try to keep it always professional and educational too, as you learn in university or in an economics book too, or macroeconomics book, is supply and demand, right? And then we talked about the price, we talked about the time, talking about the speed, which is momentum and volume, which is mainly driven by what? By time and price. Is there anyone who's a long-time student of mine in the boot camp? There is many in here, I guess, but I just want one to point something. Jordan, where are you, Jordan? Okay, whatever. Let's not waste time. So we talked about price and time, right? And momentum and volume. So momentum and volume are driven by what? By time and price, right? Are driven by time and price. So if let's take a case study, a recent case study. So this green zone, this green area is basically New York session. Good. It's basically New York session. Good. So let's gather the factors or the forces, right? So at first we had New York open, which means what? Which means we got volume, we got momentum, right? We got the US people or North Americans, they print up to their jobs, they start executing because you gotta make money too. That's why scalping is the only fact in the market. The market moves on a daily basis, not on a weekly basis. It moves on a weekly basis based on the collective data of the daily basis and the hourly basis. Does this make sense? I don't know, this might be somehow deep, you know, for whatever you see on the internet of Fibonacci and whatever. This is not even Fibonacci, it's something I created. Of Fibonacci and smart money, whatever, you know. But we're talking mechanics, we're talking foundations and mechanics. So assume you're driving a 4x4 truck and it's not an old-time 4x4 truck. And all of a sudden you got stuck in the dirt. Good. How would you know what four-wheel to use? For low or for high? How would you know that? Without you understanding the mechanics of the pickup, right? And the event you're going through. So let's keep going. So we got the first factor, we got time. We got New York open, right? Then the second force or factor, which is price. If you want to look at it, we got supply, right? We got basically a supply. Makes sense? This was the supply, the main supply, and this was the most recent supply. So as a whole, we have a liquidity pool or a supply, let's say. For instance, we can get a mean of it too. We're gonna talk about all of these later on. So we had time, right? We had time. New York opened the session, and the second force was the price, which is supply and demand, right? Therefore, what price did, push to the downside. Why so? Because we had two forces met together at a certain point that drove momentum, right? Does this make sense? Yes, no, please. Perfect. Any questions so far? We're gonna come to how did I mark up the supply zone or zone. Gonna come to this part later on. So far, we're just talking foundation, pure foundation, and mechanics. Price, not plus, times time equal momentum. But yeah, it's similar. I don't know what you mean by mitigated. You see, that's another fancy terminology. Good, which no, and it wasn't mitigated. It wasn't actually mitigated. And that's another reason why scalping is a fact, because we can use in here. The next step for our foundation is what? Is a Newton third law. Good. If anybody is interested in physics or knows physics. Okay, when we got what? We got basically when two bodies interact, they apply force, right? To one another that are equal in magnitude and opposite in direction, right? So we had a body, we had this body, we had this body, right? Interacted at this interaction area, which created what? Which created force. In trading, not really, shouldn't be really like as a rule that it should be equal in magnitude, but it's in opposite direction. And you keep on testing this over and over and over and over and over and over again. You're gonna realize that this is a fact too. Makes sense. Yo, Gabriel. Perfect, 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 perfect. So moving forward, this All right, now let's talk charts a little bit or trends. Good. So we got the base foundation of a trend or the base movement, which is if a downtrend, if an uptrend. All right. This is basically the main movement of the market. This is the main movement of the market. This is basically the main movement of the market. Anything else is based on this movement of the market. Because if you go to the hospital to check your heart impulse or pulse, sorry, it moves in waves. The water moves in waves. Trees, they move in waves, like their leaves, etc. The grass moves in waves. The wind moves in waves. It's all about waves. Electricity moves in waves, right? Electrons, etc. moves in waves. So everything in life is based on frequency and waves. Everything. Because everything is based on electricity, then chemistry, right? Everything is based on electricity, then chemistry. Because the force needed for chemistry is generated by electricity. I know this might be trippy a little bit, but told you trading is more about life. It's not just about trading. It's more about life. So going back to the main movement, basically. At a downtrend, we got a high, a lower high, lower low, a lower low, right? And then etc. lower high, etc. or a range, wherever it depends on the event, or yeah, mainly on the event. And at an uptrend, we got low, we got a higher high, we got a higher low, we got a higher high, higher low, etc. or a range. It depends on the left and what happened previously. So what I'm trying to guide you through over here is not just like, yeah, everybody knows that. Higher highs, higher lows, etc. Everybody knows that. But what I'm trying to guide you through is lots of informations on the chart are irrelevant at a certain point and at some point are irrelevant. So if you are here, if you are at this point, why would you care about this? Force-wise, talking force-wise. Not talking, yeah, we got an uptrend on the daily, we got bullish daily candle, we got like an upcoming daily supply, etc. I'm not talking about that. I'm just talking about execution-wise. This is a question I'm waiting for answers. So if you are here, why do you need this? Execution-wise, force-wise. More answers, please. More answers. Yo, notice guys, so all of your answers is based on your previous knowledge. Good. And that's the reason when I started with foundation and mechanics of how I personally do things. Good. Okay, Hasselwolf or Wolfie. Okay. More answers. Remember, again, the question is, I'm here. I'm here. Okay, this. I am here. Why do I need this? Execution wise and force wise. So force wise, we're talking about time and price equals momentum, right? So why do I need this? I don't need it. The answer is I don't need it. Why do I need it? Why do I basically need it? If price moves, based on previous wave, recent wave, right? Previous wave, recent wave. Why do I need this? This down here, why do I need it? As I'm progressing in the trend, as I'm basically progressing in the trend, let's put it like this. Let's grab our arrows. Good. As I'm progressing in the trend, I got a recent demand over here, right? Price was dumping from here. I got a recent demand. Price was coming from the supply. Good. We had a bullish over here, break of structure. We're gonna talk about this. We got 1, 2 bullish candles, created a top, body closed bearish, close below, close inside the candle, so inside the wick, which equals liquidity. So we got a refresh supply, means we're gonna go down, right? We're gonna go down where now? What do I actually know for a fact? Where I'm going to is I'm going to this demand over here. If I go below this demand, where I'm going to? Notice what I'm doing. I'm going to the left. I got my recent demand, which was what? The recent bows. This candle liquidated this supply over here, right? Pushed all the way up, came back, and I created this window. Not this, but this. Exactly. Execution points. I'm not an analyst. I'm not an analyst. Yeah, I do analyze super perfect. But when it comes to analysis, anybody can be an analyst. Notice if we go back, I said, why do we need this? Not this, right? Exactly. Why do you need to look at here when you're already here? So if we want to look at a life case study of the effect of Newton's third law, which is, remember Gabriel, the supply. Price predicted, came back, right, from the supply, from the demand over here, the recent lows, recent demand, pushed up, right? And still got rejected when it first interacted with the supply. So now this is the difference between a trader and an analyst. And that's why you can, with proper trading and proper practicing, you can be making money in scalping. I notice, why do I scalp gold? Especially gold, not currencies or stuff. Because of the momentum generated in gold, right? So you have advantages that you have to take advantage of, right? You have benefits that you want to take advantage of. Makes sense? Guys, don't let me drift, because if I drift, I'll finish basically the whole 2 days in 1 hour, you know. So ask questions. If you're confused, tell me I'm confused here. Interact. Because for me, this is something I've been doing for years, so I can just like do it in 30 minutes, everything. Okay, the rest, we got 31 people in here. I don't do patterns at all. I don't think anybody does out there. I don't do. Durham, we're gonna talk about this. Yeah, I can go to the 30 minutes, definitely. Gabriel, I'm on the 30 minutes. Tell me what you need. What do I want you to learn on this? I'm teaching you the foundation basically. Yet so far. Forget about the lines, for instance. Forget about the lines, for instance. We didn't even get to supply and demand. We didn't get into nothing, because there are different supply and demands coming from different time frames. And each time frame got a different magnitude and a different force too. Yeah, this all coming, we still basically the learning curve, different trading styles and etc. We're still covering that, and the foundation, basically market-based foundation. This is still like we're like in point one in what we're doing. We didn't even like crack nothing else. It's just point one. We didn't even get started to structure time frames, sessions, supply and demand, combined with different time frames, etc. First touch, we talked about Newton's third law. That's super important in trading to bust theories and entries models, different entries, why those entries, where they coming from, behavioral trading, psychology, management, risk management, trade management, building the system. What do you, this is, we still like a 0.0. What are we doing? Yeah, this is involved in entries models. Yo, Gabriel, I'm basically on the 30 minutes. What's up with the 30 minutes? This candle over here. Yes? This one here. No way, because it was reaching at a demand that was coming from this boost. Shouldn't be confusing because you got your bias from the hourly. You got your bias from the hourly. So that's when we interacting with behavior trading. What does behavior trading mean? The art of the behavior of the price. Good. Which you don't even need to know the names of like engulfing, doji, whatever, like Morningstar. You don't even need to know the names because you can call names to tomorrow. You can call this Elisa, you can call this Khaled, you can whatever. We can understand the mechanics behind the chart. Good. Good. So yeah, smaller time frames, Jordan, you here. Basically, Jordan is one of my most successful traders that I've trained. Good. So anything below the hourly is for entries. Good. Anything below the hourly is for entries, basically. Good. Why? Because we interact based on an hourly basis. That's why we got 24 hours. Have you ever heard someone telling you we got 48, 30 minutes in a day? No, it's 24 hours, right? So anyways, it's not true. It's not true. So the behavior of this candle, what was it? The behavior of this candle, what was it? First, we got a higher weight, right? That generated liquidity. Do we know for that this is a sell? No, in fact, I didn't even think about selling this hourly candle. I wasn't selling this hourly candle. Why? Because we got a bullish daily candle. At that time, it was bullish daily candle, and yeah, it didn't come close to the daily supply. However, price was rejecting from this hourly demand that was coming also from the left over here, right? But still, and we had this engulfing candle, which is a momentum candle, we call it. Get that generated liquidity for bearish pressure, but still we're on uptrend. We're on uptrend. How come we're gonna sell if we don't have a shift point? So by that, we're just going to be predicting tops, which is we go to speculating, which is not trading. Good. That's when we use the foundation, which is higher highs, higher lows, lower highs, lower lows, etc. Right? So the behavior of this candle, we had a higher weight that generated liquidity, push the candle of price all the way down, and this candle closed below the body, below the open of the previous candle first, and the whole candle closed inside this wick. Good. And wicks are a sign of liquidity. Wicks are a sign of liquidity. The only fact about liquidity is wicks, tails, whatever. Wicks are liquidity. So by that, what we understand is price is pushing down. Okay, work price is pushing too. At first, don't forget our recent demand over here, which was middle of the range, or you can call it a bulls. Good. And if you go to the 30 minutes, you can see the demand clearer over here. So this is our first stop, right? So now we study the behavior of this candle, right? So since we close in a liquidity region, what means is we're gonna get a higher wick. You got up to 95% of candles having a higher wick and a lower wick. If you just do a case study, from here to here, let's see how many candles got a higher wick and a lower wick. This candle got a higher wick without a lower wick. It's a small lower wick. I don't consider it. Good. You got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. You got 25. You got 25 out of 1, 2, 3, 4. You got 25 candles with a higher and a lower wick out of 28. What's the percentage of that? Make sense? Okay, perfect. So far as a trader, your job is here done after taking the sell. And if you've seen the recent sell-off took on Instagram, they were this hourly candle, not this hourly candle. Good, because so far on gold, especially on gold, this candle pushed all the way up, definitely to the supply. As a scalper on the lower time frame, you can understand that I got sell. But where are you gonna sell it to? You're gonna sell it here. Because remember, your job is not to speculate. Your job is just to move with the market, right? And it still is stuck at this demand, which was a boss, etc. Right? You can see price from here pushed all the way up, etc. Then once this closes bearish, you're gonna understand, okay, perfect. I'm gonna get a higher wick and push down. Push down where to? Push down where to? Push down to this recent demand. You can definitely be predicting that, yeah, okay, and speculating that it's gonna go here. Good. It's gonna come all the way here. But again, you want to make money, and you want to make money based on facts and a solid foundation and something that is gonna work with you all the time, or not all the time. Let's say at least 80 to 90% of the time. Makes sense. And that's the beauty then. This is the beauty of understanding how to basically connect the dots on time frames. That's the beauty of you understanding how to connect the dots on time frames. So what happened is you got this 4H candle closed over here, right? You guys made me drift and get into something I didn't want to even talk about yet. But you got this 4H closed coming from the supply, liquidating this candle, closing inside the liquidity. What does that mean? That we're pushing down. Okay, so we're pushing down initially where? We're pushing down to this demand over here, which is the recent demand and coming from a bulge, right? Make sense? Okay. Therefore, but when this 4H closed, where did it close at? It also closed at this demand, which is the hourly demand over here, right? Means what? That's gonna create a higher weight. Okay, looking at the hourly, where the higher weight can reject from such a rejection to generate all of this force to go down. It needs what? It needs a supply, right? That supply is coming from here, which is on the 4H, this is the supply, right? Boom, boom. Hourly close bearish. But still, because it's gold and gold can be trippy and really flipping around like a good girl. Good. You don't want to be tripping, so you took a sell from here. This you're talking about 60 pips under an hour. Good, which you can get in a couple of hours in a currency. Then it closed bearish. And you got your buys from the 4H. Now we're going down all the way down here, right? That's where the hourly bearish candle closed, basically. This one. And then this one. Nah, not this one. Sorry. All right. Okay, that's where this hourly closed, basically. You can see it pushed all the way up. The lower time frame or the minute time frame, we're gonna discuss the entries models later on. You can see you got your first price to execute at, and you got another price to execute at too, right? Boom, push down, 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 and then pushed up. Good, and then which is pushed up first, sorry, then pushed down. That's how which closed like this. Coming from the 4H, you understand that. Okay, we're pushing down now. Okay, but me, I want to be aware of everything too, because this is also an hourly. Because this is also an hourly supply demand, sorry, and can be effective, especially that it's in a New York session too. Good. So it closed. Then the new hourly opened. You're understanding the fact that okay, I'm pushing actually down, right? So looking at the chart, where can be a potential higher wick since it closed at the demand, but I understand the fact that we're going down, where a higher wick can be potentially found at. So looking at your previous, remember, previous wave, recent wave, right? Previous wave, recent wave. Looking at your previous, you had a low over here. You had a break of it, right? And price sunk down from it. Right, so looking at your wave over here, this recent previous wave, you want to sell the recent wave, where can you sell? Where can you see signs of liquidity? First of all, we had this bulge, we had this low, which is a bulge over here. which is bringing us to the fact that, okay, I'm here, over here. But remember, this is a minute time frame too. So you want to cover at least a decent liquidity region, which is over here. Drag it. That's your entry, wherever you want it. You can do it like this too. Pushed up, bearish, again inside, consolidated, boom down, and pushed up, got again another rejection, came to this hourly demand, tried to trip a little bit, tried to reject, but was useless too. Then boom, liquidated. Another sell from the sell, right? Where to the bows. All right, now it came to bows. Where is it gonna go to? Let's delete everything. Now it came to the bows, which is a 4H bows. And if we want to look at the daily too, this is a daily liquid region. This is a daily liquid region, right? And we got a point in it, which is this 4H bows too, right? Now, where's it going to go to? Remember, previous, recent. This is your recent supplier. Make sense? Bro, for both, it's a concept. It's a break of structure. Is where the break of structure point was or occurred at what price. And then that price, you need to understand what was the most recent interaction to create the force, which is the demand force, to push the price further up. And wicks, they equal what? They equal liquidity. So if I have wicks, then I have what? I have liquidity, right? A good sell. I don't understand. Good sell. $43. Talking about this, right? Yeah, because I've discussed it though. We already understood the behavior of the 4H. Because of this 4H candle. Yeah, I'm on the 1 minute. This sell. This sell we took from here. You're not listening, bro. Because of our first of all, we didn't sell the top because we were not sure about what's up. In fact, I bought the lower wake of this candle, then it closed bearish. Then okay, coming to the fact that what putting this liquidity together and the behavior of this, the closure of this candle to understand the fact that if we're pushing downward to, this is the first stop we're pushing to, right? And then this closed bearish at this demand. At the same time, we had this 4H candle. At the same time, we had this 4H candle, also the behavior of it closing inside this demand, right? And closing below the open of this candle, generating what? Liquidity that we bearish. We get a bearish volume coming or bearish momentum coming. The same time when the new 4H opened, that was the open of the 4H, the new 4H candle. And this was at demand, right? That's why it pushed all the way up to this recent supply and then closed like this, right? So we wanted to sell the next candle. Is it clear? So we wanted to sell the next candle, which is now we got the confirmation of the 4H that the new 4H created the higher wick, etc. And we're pushing down, right? On the 4H, we got okay, all liquid and we're pushing down, right? So when we went to the 1 minute time frame to sell this candle, this was where the candle closed at, right? And this was where the new candle opened and pushed. So forget the buy, because we're in a selling bias, and that bias is coming from a 4H time frame. We're talking about a greater magnitude, a greater force. And again, to the formula or the foundation of previous wave, recent wave, where in this previous wave can I sell at? It's either this over here, this liquidity over here, or the top over here, right? That's where we sell. Make sense? Jason too, make sense? Why not buys? If it's that easy, everyone would make money easily. All right, let's take a break, 10 minutes, coffee break. No, no. Then you're not listening to. Yeah, 10 minutes coffee break. But before that, no, I execute mainly on the lower time frame, on the 1 minute time frame. That's for entries, mainly for entries, so I can get a decent entry with a decent risk to reward ratio. Because if I want to execute this sell on the hourly time frame, because if I want to execute the sell on the hourly time frame, my sell, my stop, my TP, 1-to-1. The heck is this trade? Exactly. Jen, yeah. See now the difference between the risk to reward ratio. So if you want to execute in the hourly, that's a 1-to-1, right? Considering all the information we've learned from the 4H and the hourly. See what's the difference now? It's 1-to-5 or 1-to-6. Yeah, exactly. This was exactly that trade I posted on Instagram. That was my risk entry. And then as was dumping, consolidating over here, I risk more, push down, I close these, and this was taken at a break-even point. And then when this closed bearish again with this liquidity, sold more, stop loss, and took it down to the hourly demand. No, that's impossible. Me explaining in Arabic. I don't even know how to say shit in Arabic. Yeah, I speak Arabic, but it's like straight Arabic. You know, it's like a slang Arabic. Like all my education is based in German and English. Yeah, it's only English, bro. All right, let's take a break. 10 minutes, coffee break. Go drink some water, drink some coffee, whatever, smoke a cigarette, and keep on cracking. 10 minutes. Hey, yo hablo español. Ah, un poco. Yeah, exactly. That's the second cell, though. That's the second cell. That's this cell. This first cell was based on the stop and the behavior of this candle. Okay, you're welcome. You're focus, guys. You're focus. I told you from the beginning, it's not easy. Yeah, I make it look simple. Everyone tells me like I'll make it look super simple, but it's actually not easy. It's up to me, you know. If I want to wait 1 minute candle closure or like it's not even aggressive because but it's better to wait. It's better to wait for one. It's better to wait for one. But if you wait one, then you gotta wait the other one to create a higher low, etc. And it's like, yeah. This is trading. This is actual trading. This is not Fibonacci and you buy at 70 something or 60, blah blah blah, and golden ratio and cross or dead cat, whatever. This is actual freaking fucking trading. Excuse my language. No, I don't use nothing. I'm a behavioral trader. I'm a scalper. I'm a behavioral trader too. Yeah, I hold trades for 6, 7 months, but that's fundamentally driven, you know. But how I make 98 or 99 of my money is scalping, you know. Because if you want to look at this, want to look at this. If you want to look at this. The first sell I took, that was 50 pips, right? Second sell I took, that was 60 pips. Do the math. 10, 20, 30, 40, 50 lots, even 5 lots, 1 lot. You already made like a G over here. 0.5, you already made like 600 bucks. 0.1, you already made like 100 bucks. Yeah, because again, remember the 3 forces: price, time, and volume momentum. Price times or plus price equals momentum. After the break, I gotta do that. Honestly, guys, made me drift because like we got into step 7 and we were in step 0. Like I don't know how but I told you I drift too much, you know, because This is what I do on a daily basis for a long time, so it's an easy job for me. So I don't want to trip because I can mark up and break down a whole freaking chart for a month in 30 minutes. So after the break, 7:37. So 47. We start. Take care. See you in 10 minutes. Yo, what's up? I'm back. You ready? I'm pretty sure most of you are now pretty much confused, right? And this what happens. I could have just said no, but this what happens basically when you rush into knowledge. Good? This what happens when you rush into knowledge. Because I was in step 0 in the foundation. And you kept on asking me questions and you got me into step 7 when we basically had like tons of stuff we didn't even talk about. Right? It's all about the foundation. It's all about building the accurate foundation and connecting the dots. So it's a puzzle. You can think about it as a puzzle. That's why I say trading is more about life. Good. You can think about it as a puzzle. Good. The more can you put wrong pieces together in the puzzle? Some pieces, yeah, it works, but you ain't gonna get a picture, right? So you need to understand how to connect your puzzle and how to have patience while doing that. Makes sense? So as I was saying before, you all made me drift. We're about market-based foundation. Good. We're covering the market-based foundation. Let's not draw nothing. This just illustrate on the chart for better understanding. So the base movement of the market is, if you're on a downtrend, down. Good, which is you got a high, a lower low, sorry, lower high, lower low, lower high, lower low. Good. So, and then once we're proceeding going up, we're going to be creating higher highs, higher lows, higher highs, higher lows, higher highs. Good. So if remember, when we talked about this candle and we said that we could not be taking this candle or selling this candle because then we're speculating, we're picking tops and bottoms, because this over here is the shift point, is the transformation point. Good. So let's look at a clearer case study over here. Good. So we had a high, right? Then price dropped. For that, we had this low, high, low, higher high, boom, lower low than this low, right? Then we created a lower high than this high, lower low, lower high than this high, lower low, then boom, higher high. What do we call this over here? This, as you see on Instagram stuff, it's like CHOCH. What does that mean? Aha, change of character. Good. This is a change of character. Good. So what does that mean, a change of character? Let's not use reversal. Market shift. Yeah, we shifting, change of direction. Yeah, we're changing direction. But does this mean me blindly buying this? No. So we agreed that the change of character or market shift, as I call it, is this transformation point. So remember, I'm gonna burst your bubble with a couple of things now. It's not about rushing the trade or about you being afraid or FOMO, fear of missing out the opportunity. Good. It's nothing about that. As we've discussed over here, we basically discussed over here, we missed this here, right? But we sold this one, we made money. We missed this over here too, but we sold this one and made money, right? And we bought this one and made money too, right? All the way here, right? And we missed this rejection over here, but this might close decent and we get a sell this point over here, right? Or even lower to this point. Whatever. Excuse my drawing. Wow. Right. So because you don't focus on details. Because you don't focus on details. And now you're making me drift again. Now you're making me drift again. Please stick to my plan. Please, with all due respect, stick to my plan. Because I'm the master of drifting, to be clear, you know. So I don't want to be drift. I would like to pass the knowledge step by step. Good. So again, sometimes you'll be thinking that you're missing the trade, but when in fact, basically, you're not missing out. You're just taking an accurate trade, a more accurate trade. And that's what I call a sniper entry, a sniper trade. This is not a sniper trade. This is not a sniper entry. This is not a sniper entry. A sniper entry basically is an entry that gives you no drawdown and it moves directly in your direction. This is what a sniper entry is about. Good. So we missed this one over here. We missed this one over here. What about this one over here? So if we look at the minute, where we can sell is over here, right? Again, don't dare you to take a trade now. It's way too late. It's done, but it's just like it's illustration. Good. It's basically illustration. Good. So your stop loss is above the high over here. Your TP. You can put your TP over here, but if you want to be rational, you be okay. I got this demand over here, right? And then I got this range. As I call it, liquidity books. You get a range. And this was the recent one in it. So I might just stick to this one instead of just waiting this one. Because it might spike down it, it's more just like predict from it here, etc. Right? So a sniper trade or a sniper entry is what basically gives you a trade with no drawdown window. No, I'm a behavioral trader again. It's called behavioral trading. It's not called solid trading or fixed trading. There is no There is no there is no constants. It's variables. It's all variables. It's all based on variables. You can't even be doing like 1 to 3 or 1 to 1. You can't be doing that. But yeah, definitely there is a max stop loss too, which is for me is a max of like 15 pips. I might have 20, but that trade better be giving me 100 pips at least. We gonna come to this, Gabriel. Please, don't guys let me drift. What you talked about, the candle close, it's the sixth step in my journal where we gonna talk about. Good. So far we're just talking about concepts. Good. Making sure you guys understand the concepts. Good. So again, market change behavior. Good. Market change behavior or character, as Instagram says it. Good, whatever. So let's stick to education is shift in direction. Good. So we have a shift in direction or behavior. What does that mean? What does that mean? So we had a high over here. We had a new high over here. Does this mean that price is gonna stick to this and push up, or price is gonna come back to this demand over here and push up? What do you think? Forget that you can see it, but what do you think? So we tend to buy such a bows. We tend to buy such a bows over here when price is already moving and created such a momentum above the bows, right? Created such a movement above the bows. Make sense? But over here, what did the price do? And plus, if you want to focus on it too, we have this demand over here. We got the retest of the break, right? And this was our what? This was our recent supply over here, right? So this is the buy over here. But what if we want to think about it too? What if so far we're just looking at the hourly, just discussing foundation and structure. Good, just discussing foundation and structure. Many questions will be answered once you learn how to get into many time frames and connect the dots. Good. So some will argue, what if like this was a wave? This whole was a wave. This whole was a wave. This was the correction of the wave coming back to this bows over here, right? And then we're gonna get another wave here. Is this person wrong? No, right? This person is not wrong. It's a good idea. But however, that's when we use time frames. Good. That's when we use higher time frames and lower time frames. That's when we use higher time frames and lower time frames to manipulate decisions. That's how I like to say it. Good. To manipulate basically decisions. Makes sense. So how do we make sure that, okay, we're pushing up? And this was not just a corrective movement of this previous wave over here, and it's going to create another wave to the downside, another lower low, and then start pushing up, right? That's when we connect more dots in our structure, right? That's when we connecting more dots in our structure, which is what? We already had a downtrend over here, right? And we already had a change of character or a shift in direction. We already had a momentum, we already had a shift, right? And inside that shift, this was the recent demand over here too, right? But what if we look at the daily? What if we look at the daily? What if we look at the daily? What do you understand from the daily? We got a bullish daily candle, right? We got strong momentum, bullish momentum, as we've seen on the hourly time frame. And we got this one closing bullish. This was a rejection from here, which makes sense for it to push down but not close bearish. However, it closed bearish. Good. So it makes sense for this one to be pushing up, right? Perfect. Back to the hourly. Good. So we identified that, okay, this is a change of character or a shift in behavior or a shift in direction, whatever the name you want to call it. It's not about names. It's about the proper understanding of market behavior. Good. Not even a structure, behavior. Good. So, and this is our recent demand over here. So you got what? Look at the daily. Where was the daily coming from? First daily was coming from a weekly supply. Sorry, weekly demand. That's first of all. You got strong bullish candle over here with a strong wick closing to the upside. And this was bullish until it met this lowest point of this previous wave, right? Which pushed down, which is nothing to indicate about nothing. Just that candle closed bearish. Does it indicate that we're going to push all the way down? No, because it's nothing closed inside the body, even got liquidity to the upside, so it's nothing to worry about. However, the next daily closed bullish over here, which confirming that, okay, this was my demand. This is another demand over here. We can push up first to meet this target over here and then this target over here. Make sense? All right, now really you got two possible scenarios, right? It's either you have a buy limit over here, an aggressive entry, or you wait what? You wait an hourly bullish closure, so you buy the lower wick and you take it up, right? However, even if you waited and this, you would have gotten one and this pushed up, unless you would have closed some at this point over here, you have gotten break even. And for me, this is not a buy no more, nor a sell too. This is basically a dumb behavior. That's why we understand on the daily too. Looking at the daily, understand that it was a rangy market too, right? It was range. It was a range. But again, that's why sometimes, not sometimes, a proper understanding of structure and the foundation or the behavior of the market can save you lots of suffering. So you understanding the fact that we're bullish from here after this short point or wherever, you know, Having buy limit over here will save you the suffering of this over here. All right, and then pushes up. However, just to see that the market wasn't even ready for that, just to understand that the market wasn't even ready for that, you're gonna understand tops and bottoms of waves. When you reaching a daily area or a weekly area or wherever, this is a stop. This whole thing over here is a bottom. This is a top. This is a bottom, top, bottom, top, bottom. So it's very rare for you to have such a top. Like just one click and down. It's not even one click and down, because if you want to look at it, it's a combination. Good. So why rush? And with proper understanding of the foundation too, you understand for a fact that if I miss a trade, it's fine because I'm gonna get a better one later on, right? So if you're talking about this buy, if you miss this buy, if you basically miss this buy, you be sure that you're gonna get another buy over here. And somehow the next buy you got was way better. Okay, definitely you ain't gonna take all of the TP if you're just looking at the 1 hour time frame, but if you're looking at the daily time frame, you're gonna have a proper understanding that this is where my TP is, right? This daily supply is where my TP is. Makes sense? Okay, 2 yeses out of 31 people. So here's the thing. Good. Here's the thing. If you don't understand something, just say it out loud at once. Can you repeat? Yeah, definitely I can repeat. It's the TP because it's the top of the structure without breaking it. No. Not really. Looking at the daily. Looking at the daily. Good. Looking at the daily. After we discussed all the structure on the daily. You buying this candle, where are you buying it to? You're either buying it to here, right? Or you either buying it to here, right? Makes sense, guys? But if you're just looking at the hourly, if you're just looking at the hourly, you'll be most probably taking it to here or to here, right? But then again, with the proper understanding of market behavior, you understand that this is trash, that this line is trash. Why? First of all, if you want to, because, okay, each point you look at, you got to understand the region of that point, where that point is coming from, and what kind of development has been coming or affecting this point, right? Makes sense? Like the person who you are now is based on what? Is based on your past experiences. Whether you're doing good or whether you're doing bad in your life is based on your previous experiences in your life. So for me to understand where you're coming from now, I gotta understand where you actually came from and what kind of shit you've been through, right? Let's put it in the chart. Let's put it on the chart. So this was the top for this wave, right? Going back to the left, always to the left. This was where it was coming from, right? This was where it was coming from. You don't even consider this as a demand. This is trash. Okay, stop pushing down. Remember, where did it actually push back to the supply? From here, right? He had support, he demand, pushed again. This bearish liquidated the region, then we start dumping to the downside, right? Make sense? So this is not how to draw supply and demand. It's not about how you draw supply and demand. It's about you understanding where the heck that point came from. So you actually understanding where it came from. That's it. It's not about where you draw supply and demand. It's about understanding the behavior of your trend or your structure to move further with what's up, what's happening. I don't know if this is a concept, but yeah, there is a strong low and there is a strong high, definitely. And this is not just a concept coming from, it's not a concept by itself. It's something that based on daily candles and for each candles too. You know, the candles too, even at some point of my trading career, even like the people that who trade with me, they understand the fact that I don't give a freaking shit about candles. I love prices. You get, but however, candles they give you really great understanding of the behavior of certain prices. No, again, we come to the beginning. If I'm here, why the heck would I care about why am I here or what I'm doing here? I don't care, but as I'm moving to the right, as I'm developing to the right, remember as we discussed, this right is based on the left. So this left is done. It's above this left. Now there is this left, right? This left is done. We above this left. Then this left is on, right? So what if we reach a point where we don't have history? what if we reach a point where we don't have history? Let's look at Bitcoin, for instance. 28, nice. 28. Let's look at the weekly. No, not speculation. That's when you wait, my friend. Good. That's when you wait. So we don't have history. There is no history. There is no left, right? But there is market following. You follow the market. Created demand, you buy, liquidated the demand, pushed up, boom, freaking bearish candle. So we got supply over here, right? Down, back, demand. You're gonna push up. Where to? This point, this point. Pushed up, but look at the behavior of this candle. Look at the liquidity over here. Still, is there an entry? No, no entries. No entries. There I tell you, please enter me. 1 week, 2 weeks, 3 weeks. Pushing up, then boom. Liquidated all of this trash. Bullish trap. This was my entry. In fact, this is the entry that I'm holding at the moment. This over here is the entry I'm holding at the moment. I could have sold this. I could have sold here too. I sold this one already back in the days on both. But over here, I could have sold this one here. Could have sold on the top, but all of this is speculation. So when you don't have left, that's when you learn how to freaking wait. How do you win poker? How do you win playing poker? It's either about bluffing. If you have a strong hand from the beginning and there is no river on the deck yet, on the table, and you be bluffing, you be just aggressively going against people. If you have like 2 aces or something, you start betting high so everybody's like afraid of you and getting out. But once the 3 cards on the table, you can't be bluffing. Right. You gotta wait. You gotta wait. Makes sense? We're gonna talk about Bitcoin later on, where I see it's happening on it and stuff, because there's lots of fundamental driving the market at the moment, especially Luna and the way they handled the crash that happened to them. And what I've realized about them, it was actually like do a friend of mine called Yasser who actually like made me understand blockchain last year like properly. Although I already bought Bitcoin back then at like 3,400, what tons of shit that I shared with you on Instagram, but to be frank, clear, and honest, I didn't even freaking understand what blockchain is, like the way blockchainers understand it. But after digging deep into this project, Luna, I realized that this really can affect the market, the sentiment of the market. Like what you've seen so far, what you've seen so far, the effect of Luna on the market, this is nothing yet. It's about the upside, the effect on the upside. Because I'm pretty positive the attack that happened on Luna, it was planned by the founders. Pretty positive. There are lots of like pieces, they are not clearly outside, the way they handled it, the way they treated people, even like I hold so much Luna, so I made like so much money on Luna, just gambling. It was not trading, it was gambling. So I had the opportunity to be voting, and once they dropped the link to vote, it was like 11% yes, like literally. And after like a couple of hours, after 2 hours, it was like 45% saying yes. Like, dude, you just dropped the link, like literally just dropped the link. I was the 10th person to like the tweet or something. How come you just like, so you just like whatever they did, whatever happened to Luna, whether like it was planned or not, it's gonna have a really bad effect on the market. But BNB, because the only thing that I honestly believe in is BNB, because Binance equals crypto. No Binance, there is no crypto. Because Binance was the actual push of that, or the trigger of the previous bull run. And that guy did so much to crypto more than anybody else in the market. No, this was an old one though. This was an old one though. But now this is no demand. This is not demand no more, because this candle over here, this wick over here liquidated this. So this is not valid no more. So this should be pushing down to this here. But definitely we're talking about a weekly time frame. So first you're gonna have a rejection from here, which happened over here, which is, if you look at the daily, you understand where this prediction came from. And then the next area, see the behavior of the market without even me saying nothing. It's bearish. But if you want it to be bullish, you're going to be buying the shit out of it. It's like, it's your eyes. You gotta train your eyes. Let's go back to gold. Why gold? Because if you can trade gold, everything for you is easy. Good. All right, going back to the left thing. We're gonna discuss Bitcoin later on. I'll discuss Bitcoin later on. See how easy it is. See how easy it is. So that was our entry. Didn't trigger. We got stop loss. Easy. It's an easy life, right? So instead of you stuck in a drawdown with I don't know how many pips, you just lost 9 pips, right? You just lost 9 pips. That's why it's important to wait for candles. That's why it's important to wait for candles to close and chill, because also this was a dump sell too. Because you understanding the behavior and the structure, this will be coming all the way up here to 56 from here, right? Now the 4H2. H closed inside the demand with a hell of liquidity to the downside, right? And anyways, look at the time too. Anybody's working. Anybody's working. So that's why it's important to keep on monitoring your trade. So if you look at the 30, so if you look at the 30 minutes, you want to sell, right? But close bullish, sorry. Which means what? We created demand, we created a middle of a range. We're looking at the left too. We got liquidity. So it's easily going back to the supply over here. Just lots of things we're gonna talk about step by step. However, let's repeat the left thing too. Let's repeat the left thing too. So you're here. Good. is pushing up. This is your left. Pushed above this. This left is cancelled. Now this left is active, right? Push down. This is your left. Left, left, left. You get demand. Pushed up. As it's pushing up, this is your left over here. Broke up of this. This left is not much valid because it's already past it. Now this left is valid, right? Broke up of this left. Now this left is valid, right? Do you understand it? You always need a left. That's why we went to Bitcoin to discuss what if we don't have a left? What should we do? If we don't have a left, what should we actually do? Yeah, it is like a game of floors. Yeah. It is actually a game of floors. 100%. All right, so we talked about the foundation, the market-based foundation, which is our highs, our lows, lower highs, lower lows. Good. I talked about change in behavior, which is like a shift in direction. We talked about the bows. Okay, now the next one, which is time frame. Okay, now it's my favorite game, which is time frames. Believe it or not, if there is a holy grail about trading, it's just time frames. If it's you understanding how to connect time frames and how to flow around time frames. It's just how we understood now that why this sell over here was a loss. Because of time frames, right? And plus, no, a boss is the previous high, you know, the previous high. It's like a range, you know, it's like when you have a range. When you have a range, now this is not considered one, but this one is a boss because it's like a high. It's like a break and retest. It's actually like a break and retest, but a boss is like a break of structure, so it's like a fancier name, you know. It's just like a break and retest. It's broke a level and it's retesting it, pushing up, pushing down. Simple. All right, back to where we were. Yeah, and remember, we always have, remember all our formula, right? Good. It depends. It depends. It depends. It depends. With our body or awake, it depends. It depends on the scenario. It depends actually on the scenario. In this instance, over here, we have a liquidity pool, which is like this bows, right? And it's awake. So we have one over here, we have one over here. We have two prices. If it's a body like this over here, then it's a body, then triggered it, pushed up. It depends on the event, it depends on the scenario. It's like there is actually not, as I said before, it's like it's all variables. Good, it's all variables. That's why you have your formula, which is time and price equals speed or momentum. So here you ain't got nothing. You ain't got no time. Yeah, you got time, but what's the time in the session and price? It's a range now, right? So now we're gonna talk about time frames. Let's follow up from the monthly. So monthly, delete this, need this weekly, daily, 4H, 1H, 1 minute. This over here might be a top too, for it to drop back all the way down. Still, we're gonna talk about all of this now during the time frames. So let's start with the time frames. So when we're looking at the monthly is something you look at is a time frame. Is a time frame basically you look at when it's the month beginning and the month ending. Good to understand where the monthly is closing at, how it's closing, where it's coming from, etc. What are the probabilities for the next month, so on, so forth. Good. So the weekly, it's something you keep your eyes on a weekly basis, especially on Fridays and Sundays. No, not Fridays, Sundays, because it's closed. And on Monday it's gonna open. So like this instance over here, when this bearish close, we're waiting to approach the 1787 area. So we buy, price, so we buy and take it up. So once it closes, let's say for instance, bullish coming from a strong demand like this one. So we anticipate the idea that we might be pushing all the way up over here, right? And this daily got 11 days. So most probably we're talking about like 2 weekly candles, etc., for it to close. So for us to understand, okay, what's the probability of the next candle? Where is it going to? The weekly too. So it gives us a better illustration of the next weekly movement or the current weekly movement, etc. Okay, the daily gives you a better insight about during the week. Okay, what's up during the week? Like for instance, this over here too, or this over here. So when we close bullish, right? Price approach this previous bows, right? It's a break and retest area. So we sold, right? That's a sell. But there was also a buy inside over here too, right? There was also a buy inside this daily candle too. However, then this closed bullish, then that was a significant signal for us that okay, we're pushing up, we're going to our daily supply because okay, this was already mitigated as our friend said already, and most probably gonna break above it and keep moving up because on the weekly too, we ain't got nothing on the weekly, taking us all the way up to 1905, 1902, or 1900, since it's a psychological level too. But on during the day, that's when we're gonna come to the 4H. Okay, so the 4H what gives us insight about what's up, what's happening during the day, each session, the opening of the sessions, the open of the market, etc., 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 right? Which is pretty much, let's talk about the force later on. Then the daily, the hourly. The hourly is a solid time frame for information about the intraday behavior. Good. It's pretty much a solid time frame for intraday behavior. That's the functionality of the hourly time frame. Then we got the minute, which the only function for the minute is entries. That's it, nothing else. Good. So let's talk about the force. Good. So the bigger, the stronger. The bigger, the stronger. So if we got a demand coming from the monthly and the weekly, this is a pretty much really strong demand. Good. This is a pretty strong demand. Good, or supply. daily as well. So the monthly is strong for what? For the weekly and every lower time frame. So a daily demand or daily supply is strong on the daily and any lower time frame. Good. Now on the weekly, now on the monthly. Good. So a strong 4H supply or demand is going to be strong on the 4H, 1H, what's lower to, etc., etc., etc. That's the time frames and the forces of the time frame. Makes sense? Let's look at this. This is a weekly and a monthly demand, right? However, before that, we had a daily demand. But did this demand affect the weekly? You can barely see it. It's this lower tiny wick. So that's important. If price is shifting strongly, it needs a weekly supply or a weekly demand. If price is really shifting strong, it needs a really good, strong weekly supply or a weekly demand. Then definitely the supply and demand that you're getting on the weekly, or the monthly, is gonna match with daily for each 1 hour supply or demand. But you're gonna have lots of trash on the way down to. So if we want to look at the hourly, where was like 87. You got 1, you got 2, right? Fairly price would definitely have reacted to those. But what's the difference then? If you just stuck to the hourly, that you would have both and got stuck into a 60 pips drawdown, right? Before I start pushing in your direction. This is why it's way too important for you to understand time frames and where all of this coming from and how it's mapping out on higher time frames and lower time frames, right? Make sense? Okay, now we're gonna get into the the fourth point, sessions. We're gonna get into the fourth point, which is sessions. Good. Sessions. The strongest session is in New York by statistics. You're definitely gonna have some London sessions are strong and New York are ranging or like a bit of volume, but most probably your London session, London is the green one, is the most volatile session. Good, is the most volatile session. So you gotta understand something too about sessions. Asian is the first session of the day. So we gotta treat every day as an independent day. Yeah, definitely it's based on the left, but each day is an independent day. Good. So Asian sets the base for the day. So at this point, Asian was consolidating around the demand, right? Then London took it. Remember what we talked about back to ground zero? We talked about the forces, right? Forces, or we talked about forces. Anybody want to answer? What are the three forces? Price, time, momentum. Good. So set the ground, strangely, London opened at a demand. London opened, price at a demand, pushed up, right? Okay, perfect. So New York opened, there was nothing. So New York, what it did, pushed up, took price to supply, and then rained, right? Makes sense. Then agent opened, it was in a range, in a tiny range, so it took the price a little bit down. This liquidity over here, which is the first price in the liquidity pool, and drove the price up. London opened. Where did London open? Price, time. London opened, price, supply. London pushed down, right? New York open. Where did New York open? Price, supply, open, took the price to demand, right? Does this make sense? Yo, guys, can you hear me? Perfect. So New York opened again. New York opened, price at supply, time, New York open, so equals strong momentum, strong volume, sell. Makes sense? So sessions, they represent volume and momentum. Good. New York got the most volume in it. Then London, then the least volume is Asian. Can you hear me loud and clear? Perfect. Then New York, then Asian got the least volume during the day. So usually Asian sends the ground floor for or the foundation for the day. Good. So over here, Asian was ranging while slowly dropping down. Or what's this? This is that. Agent opened, ranging between this supply and this demand, while slowly dropping down to this demand over here. London opened, high volume, at a demand, at a nice price, pushed up. All right, so New York opened, was nothing to the left. They need a stronger price to drop from, which is this price, right? Remember, that's why I taught you the region of the points, where are they coming from, to understand where those regions are coming from. I don't have a strategy, bro. It's a system. So don't use I don't use that phrase. It's a system. And yeah, sessions are important in not just my system, in every functioning system on earth, you know. Because there is no point to trading now. There's no volume. You either need a strong price or I need that session to open. Yes, a sniper, the way I taught you sniper, which is entries, fast trades with zero drawdown. That's when we put our three forces together too. Time, entry, momentum. I don't wait confirmations. I don't look for confirmations because if I hit supply and I'm sitting, then that sit is coming from the higher time frames. Unless shift points, like this one over here, like this one over here, like this one over here, like this one over here. Shift points, I wait for confirmations if I don't have a confirmation from the higher time frames. Right? So it's a confirmation and a no confirmation. Because for instance, when we wanted to sell this candle over here, we knew it's a sell and we knew exactly what we're looking for. So we just needed to come to our price, right? That's it. Okay, are the sessions clear? I want to see 29 yeses. But those ones, or those ones, those ones, this one. This is a continuation. You got to reject from somewhere. Rejecting from here is pointless. First of all, this is a liquidity. Yeah, yeah, you use it. Your draw, man. You just did. Annotate. This buy, this buy, this buy. Okay. So this is a liquidity pool, right? This is a demand. This is a whole demand. And this demand I shouldn't be annotating. I should be. This is a whole liquidity pool. This is a whole liquidity pool. Let's look at the minute. So inside this liquidity pool, we got two prices. We got this. And we got this, right? Delete the liquidity pool because you understand this is a liquidity pool now. Now. So this is where agent opened. This is the agent open. Pushed up the supply. Got rejected. This demand still got rejected, but no clear evidence of bulls, and drop this reading. So what happened initially? You got time, agent open, price, you got supply, right? And even here, this candle, there is no session is open during this candle. There's nothing open here. This is where Tokyo opened. Then Hong Kong, Australia. Grab liquidity. Push. Make sense? All of this over here is a liquidity pool. The boss, this was the whole recent demand. This is the whole recent liquidity. How didn't try, bro? Leave me alone, man. Leave me alone with my entries and stop losses. We didn't even reach there, bro. Yet. Didn't even reach there yet. Man, you're giving me like heart attack. Yeah, the boss came. Wait, the boss came from this lower point. You're right, but we got a whole liquidity area here. We got a whole liquidity area here. Initially, the only buy I'll be executing is this. Yeah, 60 pip liquidity, even get 100 pips liquidity too. Right? But then you woke up in the morning and you saw this. You understand where this came from. If it's not obvious on the hourly, then you go to the minute. And you see, all right. You feel what I'm saying? Is this a trade I would have executed? Absolutely not. ¿Por qué no? Because I have no idea that it's gonna reject from here. And I don't trade agent too. And based on my structure, this is my entry over here, the box over here. Yo, Gabriel, what's up? Yeah, I trade in New York. Yes, 1 hour time frame. This. Why this? This my boss, right? No, man. No, 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 no. Yes, no, no. You don't look at it like this. You don't look at it like this. This candle over here was the candle that liquidated this top, right? And since this top was strong top, you gotta flip and create some demand on it, right? So this candle over here that built the recent demand, which was the supply, right? Makes sense. For what I've been saying for the last 60 years of my life. Yeah, man, it's going to be on the institute. We're going to be on the institute. Yo, Gabriel, where are you? You don't get it yet. All right, this was my supply. No, not this one. Forget about this one. Forget about this one for a second. Forget about this one for a second. Good. Forget about this one for a second. See this supply. You see this supply. This was the major shift point. Yes, this was the major shift point. Okay, coming here. Boom. Price should have reacted where? Over here, right? Price should have reacted over here. Please, you with me? Yes, no? Perfect. However, price didn't react. Price liquidated this, broke out of it. So, during the same wave, after this candle, after this candle, where's the price going to push up from? From here, right? Not from here. Market retested, pushed up. With the retest, market created a liquidity pool over here. Means we have a 60 pips demand over here. You getting it? And since it's a pretty much 60 pips demand over here, means what? I gotta go to the lower time frame, to the minute, and see what the heck is happening inside there. Right? On the minute, I can see that I got two major prices inside that. Liquidity pool, which is the demand, which is this one and this one. Makes sense? Well, okay. Makes sense or not? If it's the obvious, everyone will be making money. If this comes down, you ain't gonna react to this. Gonna come all the way down to this place over here, probably this here too. If it came down all the way, it's either gonna come here or here. Yeah, I know it's totally different. I know it's totally different, but this is trading. This is not trading view chart on Instagram. This is trading to make money, you know. What's lovely about it is you always constantly learn because you learn from the chart. You learn always from the chart. And if you remember, I woke up and I found this. So I looked here, then I got to understand where this came from. Yeah, I got a whole liquidity pool in here. But what is inside this wick? Exactly. Yeah, Luis. Yeah, you're right. Okay, we got this wick on the hourly, right? We got this. You're talking about this or this? Jose. Talking about this or this? Which one are you talking about? One or two? This one, this two. Guys, quick. You still got loads of shit to cover. Okay, so you're talking about this one. So this is a wick. 1810. This one here. In fact, this whole thing is a demand, not a line. This whole thing is a demand. This whole thing is a demand. But we can understand what's inside that demand from the minute time frame. Look at it. You can see, okay. This is a demand. So this whole thing is a demand, but between 1811.4 and 1811 is more accurate demand. That's it. It's just like precision, you know. Both, because this is liquidity for me. This is liquidity for me. The entire week, the whole week is liquidity for me. The whole week is liquidity. Not every week. Wait, chill out. Not every week. Not every week. Yeah, every week is liquidity, but you gotta understand the significant, the comparison between liquidities and weeks. Yeah. Jesus, I'm tired. Let's go. Any more questions about this? Eighteen 1830. Here, 2730. Because this is the recent one. Because this is the recent one. And it's a major area too. Look at it. It's a major area. That's why I talked about the origin of the dots, the origin of the prices. Not just like draw like, yeah, whatever. Yeah, right, but what's the origin of the shifting points? What's the origin of the shifting point? Why is the major zone? Look at the daily. You remember what we talked about on the daily and weekly and time frames and the force of the time frames, etc., right? Look at the daily. Look at the daily. 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 You got it? Okay, perfect. Now let's take 5 minutes break. I need to drink tea or something or water because I'm constantly talking, yeah. I'm also enjoying this and time is flying too. Yeah. Time is flying. We still yet gotta talk about supply and demand on different time frames and the different kinds of supply and demand, etc. Like 3 freaking hours just talking about 5 points. Damn. Yeah, probably another hour. It's not actually hour, 43 minutes, but yeah, I made it during the weekend because I don't care. So if it requires more time of my time, it's fine, you know. It's fine. So it's today 4 hours, tomorrow 4 hours, supposedly 4 hours. I doubt it's gonna take 4 hours. I guess it's gonna take more than 4 hours. But let's say, all right, yeah, go get coffee, guys, or tea, whatever you want to drink. Let me go grab a tea drink. See you in 5 to 10. Yo, folks. Okay, and how is the boot camp so far? Well, good. Let's get going. Let's get going. Yeah, sure, you can send me, but it doesn't mean like talking to me all the time because I won't be answering, you know. I'm a busy man. So yeah, sure. Questions, I won't be answering. I'll be there for you guys. But you know what I'm saying? It's like it's not I can't be there 24/7 too, you know. And that's the reason I got you in the community too. Normally when I used to do the boot camps, it's just the boot camp. No community, no institute, nothing. But this time around, I was like, yeah, fine. I'll give you the community, give you the institute too. So you have the whole collective knowledge, do you know? Because you gotta understand where I'm coming from. If I have like 32 members in this boot camp, so if I be able to make 5 profitable out of all of you, I'm winning because 5, if those 5 give me track records, I can fund them, they can work with my money. So it's like a win-win for both of us. Ooh, bro, the institute is 400 plus hours. It's A to Z. But again, to do what I'm doing is not easy. Good. To do what I'm doing is honestly not easy because this is, I don't want to keep on saying this is trading, but like my students know me and my people know, like actually know me. This is the only way I make money in my life. Not like boot camp and stuff. This is like the whole boot camp thing is like 1 trading day or 2 trading days for me. But it's through trading. And whatever I see, whatever I do, the way I do it is just mainly to produce tips and bag out of it. Nothing else. Not to post on social media, not to brag, not to be a really great analyst or something. No, I don't care. I don't like losing. That's my point. I got 2 houses, one in Summag and one in Dabuk. But I prefer Summag over Dabuk. All right, now we're gonna crack into supply and demand. Good. Now we're gonna crack into supply and demand. Let's do this. Nice. It's a pleasure. It's honestly a pleasure. I appreciate also the trust that also guys trusted me and pulled up. Appreciate your time. Appreciate your effort too. No, I honestly respect people who are willing to take more risk in their lives to trade and basically understand trading and they invest in themselves too. Because you know, guys, in the past I used to give lots of things for free, but then I developed kind of relationship with people that some people they just like think they owe me or something, you know. But looking at me journey to, I lost lots of money just to learn because I'm a self-taught trader. So I just lost lots of money for myself to learn. But yeah, thank you guys. Thank you for being here too. It's really a pleasure having you. It's like all of you are like really nice people too. That's why I don't like teaching much because as you've seen today, I don't like leaving nobody with confusion. Yeah. I don't like leaving nobody with confusion. So if you ask me, gotta like clear it out for you, show you the way. No, never had a mentor, bro. I mentored mentors, bro. I never had a mentor. It's not ego though. It's not ego, but just never found a legitimate person to learn from. Even the biggest mentors in the industry, I mentored personally, especially in gold. Just talking about gold. So we're gonna start cracking supply and demand. Good. Over different time frames. Good. We're gonna mark up each supply and demand we get from a time frame with its own label. So this over here, this is a weekly. This over here, this is a weekly, daily, weekly demand. Good. This is a daily, weekly demand. Good. Coming from here to, this is also a daily, weekly supply, right? This is also a daily, weekly supply. Okay, so this is so far. I don't like to be marking up the whole chart because it's not relevant. Just like to mark up where I'm trading from, etc. Good. Then coming on the daily, I have a box, which is a daily, it was a daily demand flipped into a daily supply, right? It's 1 inch, this 4 inch. Good. And on the daily as well too, I got a recent demand too. Recent demand. On the 4H, remember I had this liquidity pool over here, which is a demand. And inside that demand, I got first this price, which was a recent demand. And I got another recent demand too. Makes sense? What is recent demand? I don't get it. Recent demand. Yeah. Good. Then on the 4H over here, we got the most recent supply. Yeah, the most recent supply transmitted on the hourly too. Overall, looking at the hourly now. This is the conclusion. Make sense? As you can understand, you can see the boost that was coming from the daily got a major reaction, right? The weekly and daily demand got a major reaction too. Also, the weekly and daily supply over here got a major reaction. Not a major, but a significant reaction too. And as you can see too, this was the recent demand that was coming from the daily too, right? From this daily over here, the one that closed bullish, going to the minute, sorry, to the hourly. You can see that whatever. Good. So we good. Good. Now we're gonna talk about something called the first touch. So after combining the time frames together and talking about the time frames, talking about the foundation, the structure, the supply and demand, marking up from all time frames all the way down to the hourly, right? And we're gonna talk about the concept called the first touch. Good. What is the first touch? That's when we go back to Newton's third law, which is when two bodies interact, they apply a force to one another when two bodies interact, they apply forces to one another that are equal in magnitude and opposite in direction. And as we discussed, it's not really should be equal in magnitude in trading. Good. But it's opposite in direction. So if we're talking about the first touch, is the first touch of the level. Good. Is the first touch of the level. Good. The first touch of the level. For instance, if you look here, that was the first touch, right? And it's a sell, it moved. If you miss the first touch, then that's when you gotta wait for a cleaner confirmation to enter. And here too, first touch, right? First touch as well. First touch. First touch. So each level, if you look at the minute, look at the minute, we get the first touch, right? First touch, first touch, first touch. Then no, this was the top that we needed to shift for us to understand that we're pushing down. First touch. So if we miss the first touch, then we gotta wait for a confirmation to sell, right? First touch. First touch. You didn't get in the first touch, you can get in the bows. That's basically the first touch. Again. Oh, it's coming from here, right? First touch. Clear? Your first touch is always a hit and go trade. Your first touch trade is most probably a scalp, like something you gotta close for like 20, 30 pips and close. Good. That's basically the first touch, which is based on Newton third law and recent supply and recent demand. How long it will last? It's till you hit your TP basically. For me, a scalp can go between a minute to an hour or 2 hours. Or an hour, let's put it that way, an hour. Okay, perfect. So we still got a couple of topics, not really a couple of topics. We got the bus theory, entry models, which is lots of work, behavioral trading, psychology, management, and building the system, which we're gonna leave for tomorrow because it's like the information you guys received today is pretty much overwhelming too. So we're gonna read the rest till tomorrow. So now I'm gonna stop the recording. And see you guys tomorrow, same time we're starting. And I wish you a wonderful evening.